Hello, everyone. Mike Arnold here, co-founder, Patrick, and partners along with Bob Iacchino. Good afternoon, Patrick. Hey, Daniel. Good evening, Anissa. How is everyone doing? All right. Well, let me just review a couple things, and we'll get Bob on again. There was nothing much that came out after uh, the early live stream this morning. Tomorrow we got mortgage stuff and then crude, and that's really it. And Fed Beige Book. That's it. Yeah, and this week is really light in terms of heavy stuff. Besides Friday being up X. J&J pretty decent pullback after earnings. Netflix down after hours, but a slight bounce back after missing and slashing guidance. You can see Google and Meta, comm services leading it lower. S&P relatively flat. I guess Netflix is bouncing back pretty hard. They did project some good cash flow numbers, but the Nasdaq was down about 22 points, now down 4. Fed at 86.3, also really interesting with the Fed now is pricing in it staying at 5 to 5.25 through September, then only 2 rate cuts back to 450 to 475 by December. So a hike and at least a longer pause. Fully in still greed mode. All right, as I mentioned, Netflix. We had that. We also had United, and those are the two biggies this afternoon. But Netflix really leading it. The stuff this afternoon. Boy, I can't talk. Morgan Stanley, U.S. Bancorp, Baker Hughes, Abbott are some things tomorrow morning. Probably the biggest one is Morgan Stanley, and then Tesla after the close. So that's where we stand. Let me just get the S&P up here and bring on Bob. Hey, Bob.
What's what's going on?
How you doing? Let me just say hi to a couple more people. George, hello. Evening, Charles. Yeah, I know. Bounce back. Well, I got I got reached out to after the earnings came out, and the text I got. I'm paraphrasing from a couple different people, but this is a gift. No brainer Netflix buy. So it's buy the dip still. I thought, slashing their forward guidance, it would stay down a little longer, but this is pretty strong bounce back. It's still, from the people, I'm not just referring to Netflix now, I can't say everyone because that's not true. I'd say from the retail people I follow, 92, 93, maybe up to 95 they're full blown bulls. We're going to new highs this year. So every dip is a buy. Hey, Richard. All right. Hey, feedback. Bob, what's your take on Buffett selling Taiwan Semiconductor?
I don't really have a take on it. People ask me all the time, what do I think of Buffett this? What do I think of Buffett that? He's a pretty straightforward guy. He usually talks about it himself. So I've never looked at Buffett buying or selling anything as being any sort of short term indicator. Usually, Buffett, when he's buying something, he talks all the time about never selling stocks. So, and now he's sold his stake in Taiwan Semiconductor. Um, I don't really have a take on it. I'm just being honest. I've never put much stock into what he does because he's usually looking for 5 to 10 years of investment. So I don't have a take.
Hey, Christoph. You have a take on what do you? All right. What's your probabilities now with rate hike in May?
What do I think
What?
there's going to be a rate?
Yeah. What do you think at this point?
I think it's 100%, 25 basis points. But I heard you say it's upwards of 80 now. Is that right?
It's at 86, and it's roughly at it's priced in through the next like May, including May 4 meetings through November into November.
They've moved. Can you put that up, Mike? They've
Yeah.
moved the July rate cut all the way out to November.
Yeah, if you look here, probability. So it's at 5 to 5.25 through September, and then one cut in November and one cut in December.
I mean, if any of you here subscribe to my Substack, you'll see that this weekend, actually, I think it was yesterday I released it. I put out another blog post or whatever you want to call Substack about how I don't understand why the market is pricing in cuts. There's just nothing saying that there needs to be any cuts. Nothing. Not even the possibility of recession is saying there needs to be cuts. Now, if a recession were to cause 6% unemployment and were to cause inflation to go to 1.8%, okay, fine. But the likelihood that those two things cross in 2024, Mike, is it okay to say 0%?
In
Let's say
2024,
11%.
2023.
2023, I'm sorry, in
Okay.
2023. I'd say it's 9.7% is the probability of those two things crossing. So unemployment goes high enough to get above the Fed's 4.1% explanation of what full employment is. Remember, they say 4.1% unemployment rate is full employment. The last time, and I put this in the post, the last time we were above 4.1, I believe was 2021. I believe. Yeah. So the idea that we get into that 5.5% unemployment rate while getting inflation down below 2% in 2023, I think is zero, but I don't want to put it out as zero. So I'll say it's 9.7% probable.
And that's from thorough research and testing, right?
Thorough math calculations, pulling those numbers out of the vast calculations done squarely inside my rectum.
You didn't roll dice for it, though.
No, I didn't roll dice for it. So yeah, that's, you know, to Daniel's question there. Um, any guess on how long it takes for lagging unemployment to hit the stats? Unemployment hits the stats fairly quickly. If you're looking at jobless claims, it takes a while, especially now, because the job losses are at a level of job where there's a lot of severances. Now we've got 3 consecutive jobless claims numbers above 200K. 200K is not a big number, but we've been below 200K for quite some time. The long and variable lag of monetary policy that Milton Friedman spoke about has been understood to be 12 to 18 months. So you go all the way back to the first rate hike in March of last year. Okay, we're in April. So if that's correct, at its shortest window, the very first rate hikes are starting to hit the market. So let's say the first rate hike and a half. Now, obviously, it's not that exact, but if we believe that to be the case, now there's been a couple of analysts who have said the long and variable lags are a lot shorter than they used to be because of the transparency of the Fed. And what she meant by that, the one main one, I can't remember her name, I wish I could. The one main one who said that was talking about um, the speeches that the Fed does, the dot plots, all of the policy discussions, and the press conferences and the statements that the Fed didn't used to do in Milton Friedman's time. So the long and variable lag may be shorter, but if we go to the shortest part of the old definition of what long and variable lag would mean theoretically, again, there's never a hard, fast rule. We have the first rate hikes hitting the market basically last month.
All right. I mean, it's going to take, even if unemployment keeps climbing, to get, and they've said 4.5% repeatedly, it's going to take a bit of time to get there.
Yep.
It's going to take a bit of time to get there. So, yeah, Richard heard that one of the worst things for the market is the Fed starts cutting. When the Fed starts cutting, well,
You
the
actually heard me say that, Richard.
yeah, and when the Fed starts cutting, is generally you start getting a nice solid leg down.
Yeah, it wasn't that we said that one of the worst things for the market is for the Fed to start cutting. I said you don't want to be you don't want to be long when the Fed starts cutting, because if the Fed starts cutting, that means that all hell's broken loose from either economically or crisis wise. There's some sort of financial crisis, or the economy is completely shit the bed, for lack of a better phrase.
Yeah, so I mean, we've got stuff go. I mean, have you looked at the? Well, I think you look at it every day. The yield curve.
Yeah,
I mean, it's starting
it's
to
back
roll.
to
The
61
ten
when
twos are starting to roll back over.
it's going in the wrong direction. It was back at negative 61 when I last looked.
It looks like it's going to close at minus 6, almost minus 63.
There you go. That is not the right direction.
No, so it's going, and the 10 threes, I mean, it's bounced from a couple days ago on Friday, but it was on Friday, it was down below minus 1.6.
Right.
Oh boy. See, Richard, do it with somebody wise and smart.
Nice, Richard. Good recovery, buddy.
At least you got one of those on this live stream. So, what, any thoughts on, with crude? I mean, crude, holding up really nice, still holding up above 80.
So here's my one thing on crude today. The Chinese refinery throughputs jumped to a record high. So, so what is the throughput? It's the amount. It's a pretty simple phrase, right? A throughput. It means the amount of oil that goes through the refinery and comes out as gasoline or some other distillate, right? 14.9 million barrels in the month of March, which is a record high. So, from that perspective, you're talking about the potential for the China reopening trade. I just said China like Trump. China! The China reopening trade that they've been talking about and talking about and talking about may actually be happening now. So I don't know if that's the case. It would need to be a trend. So tomorrow they're expecting from the EIA about 2.46 million barrel draw. If you combine that big of a draw, there was a almost a 600,000 barrel build last week. If you combine that with that draw with strong refinery utilization numbers, and you could see a pretty good snap higher tomorrow. I'm not long it, just for the record, not long it. So I don't want anyone to think, but it is kind of breaking out and retesting pattern wise, isn't it, Mike? If you break out above the 200 now after that rally and retest, it's pretty strong signal, right?
Yeah. Yeah, above 83.50, it's a pretty strong signal
Yeah. So
for a long. Because we've,
tomorrow potentially
sorry.
be a trigger for that.
I mean,
Could be, not guaranteed.
we've been overbought. We're back to sort of neutral mode. We're getting the daily cycles at the bottom. We still have weekly cycles at the top, so it's a little. I'd rather have the weekly cycles roll over, but this is holding up very nicely.
Yeah.
Uh, Pep G wants to know, Bob, why gold's still holding?
Well, I mean, number one, if we're going into a recession, it should be. That's number one. Number two, if the Fed is going to cut rates, which I don't think they're going to, that's dollar weakness and gold should be holding up. So the market still believes there's cuts coming. That points to higher gold. And then third, if inflation is going to be sticky, which I think it is, that also props up gold. So there's several reasons for gold to be holding up. I would argue there's very little reason for gold to sell off right now. The sell off would be that the Fed engineers a soft landing or no landing with no inflation. That would be when gold would go down. So there's not a lot of reasons, Pep, for gold to go lower. Not a lot at all.
Bob, any thoughts on nat gas?
No, not really. I mean, we're kind of coming into seasonal weakness on nat gas. We're practically there. It's funny because, like you saw the weather in Chicago that Mike can attest to, you had 80-degree weather, 75 to 80, and then a wind chill of 20 like 2 days later.
And snow. It
So
snowed here on Monday.
it snowed. So you got a little bit of a, and if you watch my CME, I don't know why you guys would, but if you watch my CME natural gas commentary that I do every Thursday, I talked about this potential weather shift and how it would take demand from light to medium. So now we got to see what the supplies look like as we go into the slow season for natural gas, which we're basically in. So there's not a lot. I mean, natural gas is very much a weather based contract, right? Especially as you get into this time of year. So no, I don't have a ton. I mean, it's certainly not. We had a 3 day rally in natural gas. It's certainly not an impressive move overall. I would argue that if it goes back down, the triple bottom will break and it'll go even lower. So be careful with natural gas.
China reopening sounds inflationary.
Yeah, it would be. It would be globally inflationary. Sure, absolutely. So
That's
be
why
careful.
inflation could be stickier.
Right, and that's the thing. Like I said this before, and Mike, you and I talked about it from a perspective of the goods inflation, which is what has been coming down, and services inflation has been sticky. You got to be careful because you're talking about crude oil potentially shooting back up another $10 or $20, which will drive goods higher again. So if you end up driving goods inflation higher again, you got a really big problem. A really big problem.
Uh, yeah, and you know, I have a question because I'm reading more and more articles about China and Taiwan. If they were, because again, the last thing I read was potentially wrapping up the last big military exercise in August, then the window could open. If they went into Taiwan or made a move against Taiwan, wouldn't that be inflationary too?
Yeah, it would. So a couple interesting things about China. Number one, again, I don't know if you guys watched the Vivek podcast, but we talked about China on there. And I saw him talking about China on a Fox Business News show. I saw a clip of it. I wasn't watching the show. Um, Basically, he said that someone needs to go to China and say, "We will detach from you." Okay, and he said, "We will." He literally would push laws if China called his bluff. They said, "You have to reform. No intellectual property theft, um, things of that nature." And he said, if China balked, I would basically start the process of banning companies from doing any business in China at all. And he said, yeah, we would suffer a little bit from that. He goes, but it doesn't have to be as bad as you think because we have Vietnam, we have Japan, we have Korea, we have other places. He goes, maybe you have to use an older iPhone for a couple more years. But this is the time of year when we have to actually pull this card because we're still stronger than China, right? So you couple that with the Taiwan issue. And I think if he did that, China would immediately go into Taiwan. If they called his, let's assume that any president said that and actually had the power to do it and enforce it. I think China would then almost immediately go into Taiwan because then that would take a huge, huge chunk of the chips off the market, even if it was just because Taiwan was doing battle, not just like if they were to just roll in and take the country over. So all of that's inflationary. All of that is inflationary. Everything I just talked about is inflationary. So inflation is likely to be ridiculously sticky in the medium term. And by that, it was this perfect storm that got inflation up to 9%. But the Fed does not have a good situation with inflation at 4% or 3.5 or 5. Everybody's like, oh my God, we came down from 9. That's like your dad used to beat you 5 times a week and he stopped at 2. It's not good.
Oh boy. Oh boy. What do we have? We have Mega Chad wants to know, will the US dollar make another wave up?
Say that again.
Will the U.S. dollar make another wave up? Will the U.S. dollar, I mean, it pulled back today a little, but
The
will it
Fed
go
would the
higher?
Fed would have to make the Fed would have to make that happen because right now the ECB is much more hawkish than the Fed is, and that's really what's driving the weakness in the dollar from a fundamental perspective. I don't love the chart, but we are getting to our third time up into the rotation zone, so you could see it breaking a little soon. But there would have to be some sort of come to Jesus moment between the Fed and the ECB, where the Fed got either as hawkish as the ECB or the ECB got as dovish as our Fed.
What do you think about the Fox settlement? 787 million to be paid.
Yeah, I don't care. I could care less, Christoph. Christoph, are you the one that saw me in that documentary? I think it was, right? That's the same Christoph.
Yes.
Okay.
When was that recorded, Bob?
Almost 2 years ago.
Huh?
Yeah, year and a half, 2 years ago.
Feedback says Taiwan has said they'll blow up the chip fabs if China invades. That's a no-win across the board.
That's inflationary. That's very inflationary.
Yeah, that's
Honestly,
what.
if I were Taiwan Semiconductor, I'd be sending all the money and experts that I possibly could to the U.S. The U.S. would welcome them with open arms.
Yep. Yeah, Christoph says yes, it was him. Bob, why the market didn't break out even after all this bearish data for the dollar?
Say that again.
Why the market didn't break out even after all this bearish data for the dollar?
I mean, which market?
I guess the well, let's just go with the broad stock market.
Well, it wouldn't break out just off of a dollar. You got to look at why these things are happening, Mr. Hansa. You're talking about a dollar being weaker because the economy is not falling apart, but the economy is slowing and rate hikes will be paused at least, if not reversed. That's why the dollar's falling. None of that's good for the equity markets. None of it. So it's more of a three-headed monster than a two-headed monster.
All right. Okay. So,
The Jimmy Uncle podcast is a good one too, guys. He talk a lot about a lot of what we just talked about. Jim's way smarter than me on that stuff.
so is Jim still thinking inflation is going to come down rapidly?
Yeah, Jim Iorio?
Yeah.
Yes. Jim Bianco said, yeah, it's going to come down, but not far enough.
Jim
Not
Bianco,
anywhere.
I listened to that one also. I mean, he's expecting a resurgence in July?
He's, yeah, he's expecting the June numbers to show a resurgence in inflation reported in July. Or was July reported in August? One of the two. I don't remember. But that's basically what he's saying. And I couldn't agree with him more. I mean, from my perspective, that fits right in with energy going back up. If you look at the CPI numbers last month, which again, I don't know why we talk about CPI, but let's talk about it for a second. If you go to my Substack, you'll see that I put the Chicago Fed on the Chicago Fed's website. They have the answer to the question, what is the dual mandate? And they break it all down. And when they talk about inflation at 2%, they talk about PCE, not about CPI. But Jim Bianco believes that we're going to go a little bit lower, maybe down to about 4.5, 4.2, and then inflation is going to pause and then ramp back up from there. And that would completely coincide with crude oil moving back up to 90 or 95, driving some of the other things higher. So, and that would be sticky wages inflation and goods inflation picking back up again. I mean, you look at something like services inflation, you look at auto repairs, right? The parts have come down, but the cost of the labor has not. So these things that services inflation, it takes a long time for services inflation to rear its ugly head. But when it does, it just doesn't go away just like that. Not even close.
Again, if inflation goes back up, then you get any of these other things. I mean, you get China reopening, and if you get anything going on with Taiwan, it could be really interesting.
Really interesting.
You know, boy, then all the immaculate deflation would be off the table.
Right? That was the funniest one I ever heard. Immaculate deflation.
Jim Bianco podcast was really good. Bob, any thoughts on the memory market? I forgot to ask that question. Sorry.
Memory?
I
Like chips?
I guess I don't have anything on that.
Yeah, I mean, I honestly wouldn't comment on it not knowing what you meant by memory, whoever said that. So maybe clarify that for the next one or something. Or always like do what Christoph did. Christoph reached out to me in Discord, and I'm not in there all the time because it's just not, I'm not conversing with people all the time in there. But I got a message when I got tagged in there, and then I go in there. So if you guys have questions that you want me to think about or even research before this, let me know, and I'll do it. I'm happy to do it.
Bob, should I buy Bitcoin or wait?
I just sold the Bitcoin I bought. So you guys do whatever you want. I made 21% on it and I sold it. So that may not be the right decision, but I reached my target. So that was it.
Well, there we go.
Was
We
not
are
a big
getting to a
position.
very toppy area.
Yeah.
Gotta love the rotation zone, though.
Gotta love it.
Look how long.
Can't hate it.
Look how many it's held. Look. Look. Oh,
I know.
boy. All right.
Somebody asked me what favorite indicator was, and that was my answer. I don't remember that, but
Well,
I don't remember when that was.
Eventually, yeah. People go, well, they're dips that break below it. Well, yeah, those are the ones you just let go. But it
Yeah,
can
you
keep
don't
rotating for a long time. Everything comes
you
to an end
rotate.
at some point.
I mean, something Mike taught me a long time ago was that in most cases, I'm not going to say all because I wouldn't say that. It's not my indicator. Um, you get down to the fifth time and the rotation zone starts to get a little weak.
Yep.
So I generally, go ahead, Mike.
Good. No, go ahead.
What I was going to say is we get about the fourth time in there and I look for more than one confirmation that there's support there rather than just a rotation zone. Or I just leave it and wait for the next solid rotation zone to form, which is a completely reasonable way of managing those expectations.
Yeah. And then you don't have to always add to every one. I mean, you can just go into trail mode. That's what
Right.
people forget. I mean, you don't have to buy every day. You can use the rotation zone and just keep trailing then. And, just ratchet up your stops higher, especially when it gets to the point you start seeing weakening or divergences or, potential reversal patterns. Well, you put, maybe take a little off and put on a trailing stop.
Yeah.
Bob, do you think the NASDAQ or ES will hit COVID low?
COVID low?
That's
No,
what it
I don't think
says.
I don't think it'll hit the COVID lows.
So,
No, I think the October lows are not. I still don't think the October lows will hold. I don't have anything that's happened recently that tells me that that's different. So
yeah. All right. Any other parting thoughts, Bob?
no, I'm done.
And this is a light week, and we got PCE not this Friday, next Friday. That's going to be the final big piece of data before the
Right.
potential rate hike.
And it's definitely going to be big because again, that's the one the Fed follows. So be careful about paying too much attention to CPI. Okay, because the Fed follows PCE. They've talked about it. And again, if you go to the Substack, our Substack, you'll see that I wrote an article that tells you the exact from the Chicago Fed what the dual mandate is, and they reference PCE in there, not CPI. So keep that in mind.
All right. Well, thank you, Bob. Thanks for taking the time with us today.
Happy to do it. I will
And,
talk to you guys, or what? Not
will,
next week.
we
On
will
Thursday.
chat with you soon.
All right, guys.
All right. Thanks.
See ya.
All right, everybody. Just real quick, we have You'll have to ask him on Thursday. Uh, at this point, we got daily cycles now fully back to the top. So this doesn't mean we have to roll over just yet. We had that spike up in NASDAQ back to sort of flat with the closing print. The bigger pattern for the NASDAQ is this weekly double top. I will have to see if it does trigger this week. But going into the end of the week, I'm watching for, again, topping price action that could extend through. I mean, this could be a major top, like a major top area. NASDAQ's rolling over a bit. The S&P, if you look at the weekly, is just at the top. But we've had so far 1, 2, 3, 4, 5 and a bit weeks up, you know, without any red, and that's a 5 and a bit. A bit is this week, and this week could still close red, especially with OpX on Friday. But that's overall. Can it continue to push higher? Sure. But we're getting some divergent price action. This thing's really running out of steam. You know, some of these, you got some selling pressure, especially coming in this morning, and then it tends to bounce back at the end of the day. We had Netflix. Did it fully bounce back? I mean, this shows a beat miss, but their guidance was pretty bad. Yeah, it's fully back up. Wow, it was down. What was it? Where? Let me get into the 5-minute extended trading hours. Yeah, look at that. It was down below 300 at one point, then all the way back. There are so many people just buy the dip. It's when this thing does roll over, it will be a bloodbath. Because the buy the dippers are going to try to buy multiple dips, and it's just not coming back. But that's why I would like to wait for a significant topping pattern. We do have a minor one, the NASDAQ. Again, I think the NASDAQ will easily come down on the next big rollover to the 200. Probably on the next big rollover, bounce from there and then head lower. As I said, we're at the end of a nice Elliott wave cycle, but my things I'm watching are at least to get below the daily rotation zones on these. Again, support from over. I'm just using this right around these lows. I had that 4163 to 4165 area. That's my key low. Resistance is, again, 4,200. The NASDAQ, we have the pattern. I'd want that trail triggering on the weekly, but that would also violate the daily rotation zone. The Dow, really nice wide range bar today, hitting that rotation zone, but this rotation zone is getting softened. So also with the Dow, no, this is too sloppy for a double top, by the way. But, you know, you start breaking below about 33,950. You could see some weakness, although there's pretty decent support at 33,775. The Russell still can't get, still lots of selling pressure above about 1815. Could not even reconnect to that 200. I'm watching when this market rolls over again for shorts in the Russell. The VIX, absolutely no fear. So that's where that sits. The DAX, still just running on up. Nothing to talk about there. The notes just holding this rotation zone. So, holding the 50. So unless we start breaking below 114.09 with momentum, then the target's 113.15. There's just still not a lot of great setups besides a couple rollover patterns. Dollar index, now I'm still watching yesterday's high or low, but I'm watching for we had, you know, some waning momentum down here. We start breaking above yesterday's high in the rotation zone. We could see an easy run to the weekly rotation zone, if not more, in the dollar index. I am getting to the point where I'm watching for more of a bounce in the dollar index. Crude, we already talked about that. If we break above 83.50, could get interesting. By the way, tomorrow, a break above the high today with a follow through close is a percent B buy. Again, it needs to follow through close. So that could be a front run pattern. Again, not trading advice, just stuff that I'm noticing and teaching. Tesla earnings tomorrow after the close, still caught in the range. That's really about it. So, have a good night. Fragrances Worlds wants LRCX. I mean, I just watch it. 469 is the key level. I would not be bullish below 469. You're into a weekly clear path move. Easily, you could target 441, if not back down to 408. On the long side, if that level keeps holding, I mean, there's not it's caught in this major consolidation area. From a bullish case, if you weren't already long, I'd watch for a break above 513. Really. But the problem with this is, I mean, you got to manage that closely. That's not something I'd break above 513 and walk away from, because you got major resistance at 530. So then you'd have to get a follow through close above there, and then you got 547. So when I see a chart like this, unless it's something I need to be in for a reason, like it could be for a dividend reason or for something I'm bullish on, very bullish on fundamentally, it's just something I go, I'll look for easier trades. Easier trades. I'll give you an example. I'm sorry I forgot to point this out. I'm really sorry about that, but like this, this is a decent dividend play, and this is, you should add on pullbacks. You should add this to your dividend list. Whirlpool Corporation, WHR. Again, dividend yields right now, and this is on the after the rally, 511, but it was higher down here. P to E ratio. It doesn't really exist. That's why it's a little risky, but it's at least a decent dividend play. I'd wait for patterns in it, but it had an inverse head and shoulders, shoulder, head, shoulder, trigger, and now it's running. And this thing could continue to run. I'm expecting it get to a pullback area now. Would not be rushing into it now because it's already hit the first and second targets. But these are kind of things that watch for. That head and shoulders also, if you look at where it formed, it's formed at the prior major support area. Also would not be rushing into this now based off of earnings being Monday, and it's already going to complete the pattern. But these are the kind of things, okay, we got a pattern at prior support triggering with a decent dividend, could be worth a shot with a decent stop. Mike, is there an inverse of percent B buys? Yeah, there are, and I use them for just, I have different, all right. The reason I don't highlight percent B sells is because I use different parameters. Now, I use the same parameters as percent B buys for I'll say the commodity markets, like for crude, for gold, for silver, if you're trading grains. However, for stocks, percent B sells have different parameters. So for stock futures, so for the Dow, the S&P, the Russell, the NASDAQ, there are different parameters because of the natural upward bias of stocks. So in order to trigger, and it's more of a percent B profit take, which is why you don't hear me talk about that as much. And it's not based off of a narrow range bar either. You can have them set up on narrow range bars, but it's not, that's not the criteria. RTX. Let's see. I'll just pick one. Raytheon. Is a really nice breakout play. This is a multi-week. Look at this. This is a weekly chart. 1, 2, 3, 4. So it's had this top area 4 times, is breaking out. Also, I'm telling you, I think China is going to go in this fall to Taiwan. I just wanted to check the monthly on that. So, I think they're going to go in, which is going to get real interesting. Think they're going to go in before the 2024 election, because I don't think this administration will do anything. It'll just talk a bunch of crap. And they won't really, I don't know, I shouldn't get into it here now, but it's going to get interesting. All right, so on RTX 109.25 and then about just over 112 would be key targets. If it were, and this is how I'd structure, again, not trading advice, cannot give trading advice, don't know your account, don't know anything about how you trade, but the way I would set up this, here's the key, and I would do this on a closing basis below about 94 for a stop. Why you break back below this level, you'll probably retest the 200 area. So then I'd watch for another setup here. But right now, based off a breakout play, that's the structure I'd use. That's something that I'd use. And you have also that stop takes it below the daily 200. On a tighter stop basis, I'd have to at least, sensibly would be just below 98. More aggressively would be just below 100. Very aggressive would be just below 200 if you're trying to just capture this. So, can I check the NASDAQ thing? I can't get to all the stuff right now. I have to actually jump off this today and deal with a couple things. Can I check the NASDAQ 15-minute? Is that a bearish channel? It's a consolidation channel. Is it bearish? It's bearish from the sell off with a pause, but until it would have to break below the channel. I wouldn't trade it what was in the channel, and I wouldn't trade that channel in the overnight market. We still got too much dip buying, as witnessed by Netflix. Now, if it's holding above 13,140 tomorrow and we break below that with momentum, it could be a nice trade down to 13,075. And if we broke that with momentum, the next key would be 13,000 because that's where the bottom of the rotation zone is. How can I grow a small account? by learning a strategy and practicing it with, you can trade, smaller shares and proper risk management and position sizing. So you're going to want to use, and that does not mean to see what most people do with small accounts is they use really tight stops and they keep getting themselves stopped out. What you want to do is, and I don't know what you mean by small account. I mean, you'd have to clarify. And again, I'm not your financial advisor. I can't give you specifics. But if you have a too small account, it's silly to trade it. You're better to save money and get it to a sane account, a reasonable account size. And then it's using proper risk management and proper setups. Pick a setup. I don't care what, that at least puts probabilities in your favor. If your setup does not at least give you 55% winners, would not utilize it. And then I keep constant risk across all of the same setups. For example, let's say you had a $10,000 account and you wanted to use $200 risk. And it's tougher to grow a smaller account because, fees and slippage can add up. But 2% risk off a $10,000 account is $200 per trade. So I limit my position size that on any losing trade, it's going to be roughly $200. And I take the consistent setups. And if you have a winning percentage with a good reward to risk ratio, and if that's why I want something at least above 55%, because in terms of slippage, then you can go, worst case is you trade 1-to-1 or slightly higher, because that gives you a positive trade expectancy. Where most people screw up is they don't vary their position size in accordance with their risk, and they take oversized losses and smaller winners. And then they slowly deplete their account. But you have to be consistent. You can't keep changing what you do. Thank you, PMG. Well, I hope it's helping you, business person. My trading is like this. I draw a square around highs and lows. I buy at the bottom of the square and sell at the top. So for RTX, I bought 95. You know what? There's 100 trading strategies, and at least you can define it. So I'm happy you can define your trading strategy, business person. And then over time, you can gauge your percent winners. You can gauge your reward to risk ratio. And you can therefore know your trade expectancy. And therefore, you can know long term what a growth rate of your account can be. I would keep saving, Henry. Small account. Unless the only thing I would not even trade aggressively micro futures at that. With that, I'd at least try to grow it bigger by saving first and practicing. So my advice would be to save your money and practice, and then try to save some money, get a bigger account, and practice trading the micro futures, because you can get a simulated account and pick your setups and practice trading. And if you're not making money practice trading, you're not going to make it real, because once you go real, your psychology gets involved. But I'd suggest you save up your money, and while you're saving your money, you at least practice and figure out your setup or setups you want to trade, and don't do too many of them. Okay? I mean, realistically, if you're trading micro futures, minimum I'd even consider is 2,000, but it'd be better to have closer to 5. And then you're trading micros only. Why? Because you can deal with some drawdowns. Too many people trade with too small an account, and they can't even take a series of losing trades without really damaging the account. And you're going to have a series of losing trades, especially when you're starting out. So you're better to practice and prepare and build up, sock more money away, you know? Don't spend money on stuff you don't need, or, eat, be very frugal and save up money as much as you can and get a decent account and practice meantime. You'll get a lot farther a lot quicker if you do that. See, business person blew 6K when he first started, and now it's 7-figure. So that's why I'm saying you have too little account. You're just gonna. I'm not saying guaranteeing, but most people will blow it up if they get too aggressive with too small an account. And you're gonna lose some money when you first, even if you're doing great paper trading or practice trading. Once you get into the real heat of it, you're gonna make mistakes. You're gonna market psychology is a big thing to work through. And I'm not here to blow smoke up people's butt and say, you do this, you buy this magic system, and you're going to turn $1,000 into $50,000 in a year. You know what? Maybe an occasional somebody does it by getting a lucky streak and gambling, but the odds of them keeping it are still, you get bad habits in the beginning, you're going to blow the money. You're going to blow the account at some point. So I'm not going to blow smoke up people's butt, and a majority of people, especially on shorter term trading, blow up accounts. It's not easy from a psychological standpoint, and people do the wrong things. They get a series of losers. Look, even in track records that people followed of mine, I've had like 12 losers in a row. It happens. I think my record is like 22. 22, and I've been doing this since 1992. Psychologically, 22 losers in a row. Nothing was wrong. It can happen. Even with trade percentages, and I've had trade percentages consistently in the mid 70%. 22 losers in a row. You don't think even for me that's like, oh crap, what's going on? You don't think it can happen? It can happen to just catch a bad streak. Markets can get wonky sometimes. Setups, even decent probabilities, you can get a string of crap going on. Just the way that's why Monte Carlo simulation on systems is very powerful. You can, even with keeping the percentages up. Look, I've had huge winning streaks too. The problem is people get huge winning streaks and think they're some brilliant trader. And, you can get a big winning streak, a big losing streak, and still have the same probabilities over the long term. So, but most people can't withstand even moderate losing streaks. Some people crumble like 5 losses in a row. They start doing, they can't be number 6. I'm going to triple down on this one. You know how you withstand a 22 losing streak? You keep consistent risk. You don't vary your risk. All right. You vary it, meaning, all right, as the account draws down, like let's say you were risking 1% per trade, and you started with a $100,000 account. Well, your risk would be $1,000 a trade. If that account, because of a big losing streak, went down to 80, you'd only be risking $800 a trade. And then as it grew back up, your risk would go back up. But that's another way. You keep the risk as a percentage of your remaining balance. And then as your account grows, let's say you grew the account, I'm using 100,000 because it's easy math. So let's say your account grew from 100 to 150. Your risk now per trade is 1,500, because as your account grows bigger, your risk can grow bigger and your rewards can grow bigger. And then based off your risk reward multiple, your account starts growing faster. But it also, when you get in a losing streak and everything else, your account, as it draws down a bit, not only your risk is getting smaller and smaller because you're keeping a percentage. So instead of that $1,000 per trade, it's then 950, then 900, then 850, then 800. So you can withstand that, and then eventually things turn around. But anybody who tells you this is easy, it gets easier the longer you're in it, because you're just like, okay, you treat, there's a winner, there's a loser, there's a profitable trade, there's a loss. All right. I hit my stop. All right. Oh, hit my target. Fantastic. It's more like you're not celebrating, you're not in the dumps because you had a losing trade, you're not running around, having a party because you hit a winning trade. It's just like, hey, I know long term that stuff, you do the right things, you have it's a consistent approach. It's not one day, I'm using the MACD. Oh crap, I had a loser. Now I'm to stochastics. Now I'm to RSIs. Now I'm to Bollinger Bands. Now I'm to Elliott Wave. Now I'm to Fibonacci this. And now I'm to whatever. Tarot cards. You got to have a consistent approach, because if you're jumping from thing to thing, you're never going to get consistency, and you're never going to get the discipline to follow it. Well, if you have 1,000 only trade with 100, you have a high risk of blowout. I'd save your money again and get a bigger account. Yeah, you eat ramen. You're welcome, Anissa. So, and that's why this channel doesn't grow super fast, because I don't blow smoke up people's butt and tell them stuff that's a load of BS. But you gotta, if you want to be trading for a long time, you got to do the right things. With that, I'm wrapping it up for right now. Hope to see everybody back again. I'll be back in the chair tomorrow morning. Everybody have a wonderful evening. Again, follow your stop losses, follow your probabilities, follow your trade expectancy, and don't do stupid. You'll still have losing trades, but don't do stupid that compounds losing trades. And don't try to make it all back in one trade. With that, I'll talk to everyone later. Bye for now.